Good evening. It's Quant Trade Edge. And one of the comments I received recently was asking about the Forex trade and if it is still alive and well. Well, as you know, I haven't really been trading lately, but I thought I would take a look today. And a couple of markets where a very obvious trade one of them is gold. You can see here that, we had this very strong day. And then we have this, it's almost like a doji, very small body, long tail, big upper shadow, red candle, all of the traits that we look at in a setup bar. And this one is even better because the low of it pierced this previous high, which means if we go below that low, you have kind of a turtle soup type trap. And, again, I think longer term, this is totally fine. This wouldn't be a 2B unless we took out this low here of 1922. And, given that this move up is sort of one leg, I think we kind of need a second leg. So I'm not betting on that. But again, none of that matters for the Forex trade. The Forex trade is really just looking right in front of, you, what's right there. And today, the break of this low, 1970, would have then triggered you to look for your lower time frame setup pattern. So let's go down to a 15-minute and see where this broke. That's where the low was set, 9 a.m. yesterday, and it broke at 3 a.m. Now, usually we look for a two-legged pullback or a hoagie, some sort of sub-pattern within here, and it looks like the hoagie is the pattern that's set up. This bar that broke at 3 a.m., 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 bars, that's 4 hours of time. From 3 a.m. to 7 a.m., all stayed within the range of that bar that broke the low. So then if we entered on this break below that hoagie, with the stop above that hoagie, you had this little move up around the pit open, and then you kind of went straight down. So, again, let's look at the height of this. 340, 740, call it $8. The height of this was $8. The low below this is 1966.6. So if we took $24 off of that, that would be, let's see, 42.4. Let's see if we got there, 42.4. So we got about 3R out of that. Let's see, to get 4R, we would have needed 34.4. We got to 38.6. So we didn't quite get to 4R. And that sort of fits with my larger idea that, the real direction is up, but you can always have one good down day. And again, stop thinking about the direction that it's going and needing to be, in a position. If you can make 3 times your money today, turn it around and make 4 times your money tomorrow, turn it around, make 2 times your money the next day. And when I say your money, I mean your risk. That's the game of trading, not being right about gold for the next $200 move. That's more of investing. When you fall in love with something and you want to be in it, you want to see the big move, that's investing. That's not trading. Another market that I believe had a pattern today was crude oil. And again, if we go back to the daily, we have to qualify the entry bar. And the entry bar here is the fact that, this is, a very bullish candle, long tail, green body, very small upper shadow. It's coming after this big long crap out, 1, 2, 3 neutral, 4 down bars. Without a setup bar so strong, this would not have been something to play. But let's see what we do here. 67.90 was that high from yesterday. Let's drop it down to a 15-minute, see what happened. 67.90. Okay, so this is actually where we pierced it. At 7:30 p.m., we pierced it. So now let's look for our two-legged pullback. 1, 2, 3. And we again have a very big hoagie right here. It's almost a repeat of gold, except at different times. This happened at 9:30 p.m. and then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 bars. It's over 4 hours, stayed inside. And then we pierced it to the upside. Now this happened right at 2 a.m., which is the European Open time. And that can be kind of a whipsawy time, just like the US Open is. And it actually went and it did break the low of the hoagie. The hoagie low was 66.92. We got to 66.90. It did break it by 2 cents. So trading this by the book, this would have been your entry. This would have been your stop. You know, with a hoagie that big, you know, if you get some of these whipsaws, hopefully when this happened, you would re-enter again. But that's not the main strategy here that we teach. That's just more of adaptation as you do some of these and realize that, okay, around the opening time, people get shook out. But then when the move happens, it starts. The size of this bar is 50 cents. So $2 above it would go to 69.42. And let's see, we're 69.41 right now. But we did get to 69.42 by 8:45 a.m. So, you know, if you got stopped out and lost 1 hour, again, this isn't the main strategy, but if your instincts got you back into the trade, you made 4 hours. So you still netted 3 hours on one failed trade, one made trade. Something else I was watching today is First Republic Bank. This thing has, has been very volatile. It's probably going to fail, but today it had a very large gap up from this bar down here. This close of 12.18. It was up 30+% on the morning on a gap. So usually on a gap that strong, I went down to a 1 minute just because there's enough liquidity. This was still, it was a penny wide, good liquidity. And of course, with that kind of a gap, there's going to be some sort of a pullback. But again, it was, it's what we would expect. It had a two-legged pullback. There we go, trend line. From this high down to here, one leg, two-legged pullback. And that basically set up your risk bar to be this bar right here. And this bar was plenty big, 35 cents. So a 4R on that move would have been $1.40. $1.40 off of there would be $16.41, and we got that right before the halt. $16.41. And again, there's more than one way to make 4 times your risk. The first two examples are the traditional way of a high time frame married with a lower time frame. This one here is just, a special situation, stock gapping up 30% with extreme liquidity. And you see how you could have done that. And really, this stop never got taken out. This low of 1466 is still the low. It went higher, pulled back, went even higher, pulled back, stayed down now. But, you could have gotten even more than 4x if you kept with it. But, being a bank, my fundamental view is that it could fail. Didn't want to stay too long, overstay my welcome there. So those are just a few examples. The 4x trade is still well and good. If you're making 4 times your risk, you only have to be right, what is that, 20% of the time? So you lose 4 times, win 1 time, and you would break even. And I think we hit over 50%. Back when I was more active in this, my hit rate was close to 59 or 60%. And for a 4-to-1 reward risk pattern, that's a really good success rate. So anyway, just wanted to put those out there today. Hope you're staying safe, enjoying, having a good time, and I'll talk to you soon.